On this video, we're going to be talking about 7 car loan mistakes people make when it comes to buying a car. I'm talking to you. So if you just came about my channel and you have not subscribed, hit the subscribe button right now in the beginning of this video. Watch it through. If you don't hit the subscribe button now, watch it through to the end, hit the subscribe button at the end, or share this video. The reason you want to do this is because you'll be notified every time I drop a video or a short, you will be notified. But come on now, let's get into it. Number one of the biggest mistakes people make that I've seen of the 25 years that I've been in the automobile business is they get into the negative equity trap. I call it negative equity trap because people don't think about when they owe too much on their car and they're looking to get out of it. Give an example. Now, you owe $25,000 on your car, $25,000, right? And the dealership says, I'm only willing to give you $20,000. So you owe 25. Say it again, you owe 25,000. And the dealership says, I'm going to give you 20,000. You have $5,000 in negative equity that has to go somewhere. Now, it's either going to go onto your next vehicle, and that means if it goes onto your next vehicle, we call negative equity. We call it rollover. It's going to go on top of your car, how much you owe on the car, and then it's going to be absorbed into your payment. And if you're buying it, you're really going to finance the negative equity. So what my suggestion when I talk about the negative equity trap is that you're thinking about leasing the car. If you can actually lease the car, but that's going to depend on credit. I always suggest if you owe more on your car, is that you actually try to lease your vehicle if you can. So the $5,000 getting into a brand new vehicle, right? Because you're leasing it. I work at a GM store, but we also have a Ford store and we have a Buick GMC store. So it doesn't matter what brand that you buy, negative equity, if it can be rolled on to the next car. If the car is able to absorb that much negative equity. Now, why do you want to lease a car if you have negative equity? It's because at the end of your lease, if it's a 2 or 3 year lease, you have zero. You owe nothing else. You owe nothing to the finance company that you already, you roll the negative over at. You owe nothing. Because when you trade your car in and you want to get into a lease, that $5,000 goes into the next car. And what happens is the dealership sends a check to that particular finance company to pay that vehicle off because you're going to be paying that negative equity in your lease payment. I call it negative equity trap because people don't really think about the negative equity, about the right way to roll. And then also if you go to a new car, if you have GM discount or if you're driving a Ford or if you're looking at a Ford or even a Chrysler, if you got the GM discount or the Ford discount or the Chrysler discount, that helps. Well, guess what? If you don't have a discount, it still helps for you. So maybe you have suppliers. Suppliers is friends. Anybody that works at a dealership, anybody that's looking to get into a vehicle, and it is a, they work for a automotive company, a manufacturer, then it's a friend's discount, which that's able to pass on to a friend. And sometimes it's passed on to not even a friend. It's just passed on to somebody that knows somebody that works for one of the manufacturers, right? And they're able to get a little bit of discount of that. And if you can't get the friend's discount, you can't get the discount or the employee discount because you're not a friend or a family member, then you need to ask the dealership for a discount. What kind of discount can you give me on that car, right? What kind of discount you get me? So that's number one. Now, negative equity trap 2 is that I really cautious people when they trade in a used car to get another used car and roll negative equity. So there's too many other ways, a lot of other ways that you have negative equity. Now, let me just say this is a big bonus when you come in negative equity. You looking to get a new car, look for a car rebate, because sometimes you might have to put that money down to help with that negative equity. But if you got a discount, a manufacturer discount, or family or friends, or incentive, we call it rebate. Rebates help too. You can use it as money down. So always find out, is there any incentives that you may qualify for? That's very important. That's number one. Just a little bit about number one. Number 2, skipping gap insurance. This is an issue that people don't think about until later. I don't need the gap insurance. I'll be fine. Well, gap insurance is if you're in a negative equity situation and you're rolling negative onto a car and you're buying it, and that car is not, that you roll in negative equity onto a car, whether it's a used car or a new car, and you total that vehicle, that car might not be worth what the value is. And so, say for instance, I talked about number 1, you owe $25,000 on your car, and they come come back and say you owe $25,000 on the car. They come back and say the car is worth $20,000. But the value when you total your car, they say, you know what? It's worth $18,000. You know, it's worth $18,000. You know, we say it's worth $20,000, but you owe $25,000. But the insurance company says that it's the value of $18,000. So you got $7,000 in negative, right? The check from your insurance company goes and they say, you know what? We got $18,000 we're going to pay on this car, or $19,000. So you got a little bit of negative equity left, right? But you have gap insurance. Gap insurance comes in, it's going to pay the difference. But you got to have car insurance. One of the biggest mistakes people make is that if they don't have regular car insurance, but they figure gap insurance is going to come in and take care of that when they don't even have regular car insurance. And then another way too, let me just say this, skipping gap insurance. Gap insurance is always offered at the dealership if you can be able to get gap insurance, right? It's offered at the dealership. But if you don't get gap insurance into your payment, then you can always ask your insurance company, how much is gap insurance? How much is it? What are you going to pay? Well, ask them about gap insurance. I don't want to explain what insurance company, how they work with the gap insurance, because that's going to be too long in this video. That might be a separate video. So gap insurance, ask your insurance company about gap insurance. So if you go to a dealership and they don't give you gap insurance, or they don't talk to you about gap insurance, or they tell you I can't put it into your payment, then you need to talk to your insurance company about gap insurance. That's another way too that a lot of people don't know about it. We offer it. Of course, I say the dealership, of course, get it from us. Yes, because we have relationships with our warranty companies that we do business with, because this is what we do, right? But insurance company, they do offer gap insurance. Trying to think another reason why you would not get gap insurance on a car is that if you put 20% down more in that particular car. So you put 20% down in that particular car, no gap insurance. Doesn't make sense. It doesn't. You have equity in your car. You have equity in your car. It's called equity. EQITY. EQITY. I think I got that spelling right. When you put 20% down, you don't have to get gap insurance. Doesn't make sense. You're in a good equity position. Equity position means that you're going to be a good value in your car. Your car is worth more than what you owe. And also remember this, if you paying cash for your vehicle, you don't need gap insurance.